and welcome to this week's LOLC Securities Weekly Market Roundup. I am Tharadhu Amarasekara.
And I am Megara Vijaymanna. This is the sound of profitability.
Hot on the heels of the budget announcements by President Kumara Dissanayake, Sri Lanka is aiming to have a budget deficit of 5.1% from the GDP for 2026 compared to the 4.5% that was set for 2025.
Sri Lanka is targeting total revenues of 5,270 billion rupees, which is 15.3% of GDP, against revised outturn of 5,075 billion rupees, 15.9% of GDP in 2025. Recurrent expenditure would be 5,688 billion rupees, up from 5,530 billion revised. Public investment would be 1,380 billion rupees, up from revised 1,033 billion in 2025. The revenue deficit would be 418 billion rupees, down from the revised 455 billion rupees. The primary surplus is targeted at 860 billion rupees, down from a revised 1,202 billion rupees.
According to the budget for 2026, Sri Lanka will begin linking businesses with the tax office, starting with exporters who have ERP software.
In the first phase, the system will be expanded to cover export-oriented enterprises and integration with selected pilot companies through the API mechanism. In the second phase, all VAT-registered taxpayers will be included. In the third phase, the e-invoice system is expected to be deployed through POS machines to record transactions in real time, improve tax compliance, and enhance the efficiency and transparency of VAT administration through a fully web-based platform. Separately, the threshold for VAT will be reduced to 36 million rupees a year from 60 million rupees.
The government announced that it aims to achieve a 15.4% total government revenue from the budget for the next year. Here is a look at some of the key numbers from the recent budget announcements.
The economy is expected to grow by 4 to 5%. The government revenue is expected to be over 15.4% of the GDP, and the government expenditure is expected to be maintained at 20.5% of GDP. The public investment is expected to be maintained at 4% of GDP. Achieving a primary balance expenditure excluding loan interest payments of 2.5% of GDP, while the estimated total revenue for the year 2026 is rupees 5,305 billion. Of this, 4,850 billion is expected as tax revenue, and the balance of rupees 455 billion is expected as non-tax revenue and grants. The tax revenue mainly consists of value-added tax, tax on external trade and excise tax, while the non-tax revenue consists of interest income, rents, dividends, profits, and fees and charges. For the year 2026, the government expenditure, including debt servicing, is rupees 8,980 billion, of which rupees 4,495 billion has been allocated for debt servicing. It includes rupees 2,617 billion for loan interest payments and discounts, while rupees 1,878 billion for loan repayment. The primary expenditure is estimated at rupees 4,485 billion, while the primary expenditure includes all government expenses excluding debt repayment and interest. The primary expenditure consists of salaries and wages of rupees 1,464 billion, pensions rupees 510 billion, and other recurrent rupees 1,131 billion, and capital expenditure of rupees 1,380 billion.
Time for the corporate highlights.
Bank of Ceylon will be issuing 200 million debentures in order to raise 20 billion rupees, according to a recent stock exchange filing.
The Basel III compliant Tier 2 listed rated unsecured subordinated redeemable 5-year sustainability bonds with non-viability write-down features will be issued at Rs 100 each. Initially, 100 million debentures will be issued, the bank said, with an option to issue a further 50 million in the event of an oversubscription. of the initial issue and another 50 million if there's an oversubscription of the second tranche. The issue is subject to obtaining necessary regulatory approvals.
Sri Lanka's Resource Energy is planning to seek for shareholder approval for a share subdivision which will see one ordinary share split into 5 ordinary shares.
The subdivision will see 86,184,827 ordinary shares increase to 430,924,135 according to a stock exchange filing. Resource Energy stated the subdivision of shares will not result in any change to the stated capital of the company, which will remain at 967,483,260 rupees. The issue is pending regulatory approval.
Here is Tarindu with the ESG update of the week.
Sri Lanka's GP Labs, which has started operations as the island's first ever plastic testing facility, said that it will start validating recycled material, boosting the sector.
With plastic waste and sustainability becoming global concerns, Sri Lanka's recycling sector has often faced the challenge of lack of scientific validation for recycled plastic. GP Labs directly addresses this gap by offering comprehensive testing for both recycled and virgin plastics, enabling recyclers, manufacturers, and FMCG brands to ensure their products meet the highest standards in quality, safety, and environmental responsibility. With rapid turnaround times, instant digital reporting, and cost-effective packages, GP Labs aims to elevate the standard of plastic processing in Sri Lanka while supporting industry growth and compliance with international benchmarks.
Here's Megara with this week's International Business News Update.
Tech stocks took a bruising this week as nerves persist about expensive valuations and a potential AI bubble.
After a months-long rally, skepticism is mounting about whether high-flying tech stocks will continue to produce superior returns. Wall Street's fear gauge, the CBOE Volatility Index, finished the day relatively flat but had jumped as much as 16% earlier as a tech sell-off weighed on sentiment. CNN's Fear and Greed Index hovered in extreme fear and briefly hit its lowest level since April. Stocks came under pressure this week as the CEOs of Goldman Sachs and Morgan Stanley voiced concerns about elevated valuations, while Wall Street's bar for positive surprises on earning results continues to rise after a monster rally in stocks in recent months. AI and tech stocks have driven the market's bull run in recent years. As stocks rally, they can become relatively more expensive, creating an additional layer of consideration for investors. Meanwhile, there is increasing skepticism about whether the enormous amounts of money being spent on AI will be justified. Nvidia shares and Palantir shares, two stars of the AI trade, fell roughly by 7.1% and 11.2% on the week, respectively, and each had their worst week since April.
And that's it for this week's LOLC Securities Weekly Market Roundup. No matter what investment decision you make it with the right intent. We will meet you in a brand new week.